Okay, so this is our usual Saturday masterclass evening session. Good evening, everyone. 9th of November. We've got an interesting, eventful week behind us. We've got a bounce back, and the bounce back retraced also a little bit. So we're not too sure how do we position ourselves, or do we have any clarity. Chaliye, let's take a look at the Nifty first. This is Nifty futures, three different time frames. On the left hand side is the weekly, which is en route, 1, 2, 3, 4, 5, the sixth week on the downside, marginally negative, but definitely negative. And trend momentum has synced on the downside. Short-term momentum indicators have gone a bit oversold, and it's still a little shying off from that particular 23,500, 600, the top border of that consolidation. Now, weekly charts clearly tells me that a much needed correction, or I would say the first leg of the much needed correction, has happened. It's been on a high to low basis, more than 10%. So it's a healthy correction. When you take a look at a very strong uptrending market, it generally gives you consolidations and corrections, and this is one of that. 52-week linear regression channel is sloping up. Most of my EMAs are holding okay. So it's a bullish market, it's a bullish chart, it's a positive structure chart which is going through a correction. The big question mark is this 10% going to extend towards 20, or this is it and I can start shopping? Come down to the daily time frame, and we have improved readings on the momentum front. As I always typically, just like a parrot, keeps on telling you the same thing, that improved momentum does not necessarily lead to improved trend. Or in other words, a positive momentum ideally should lead to a positive trend, but not always at the same time. So the moment we see momentum has improved, it means, number one, that the degree of selling must have slowed down. Yes, the degree of selling that was happening during these days and the degree of selling in the last, I would say, 4 to 6 trading sessions has slowed down. Number one. If the selling has slowed down, has it led to a bounce back? Oh yes, it has led to a bounce back. From this low point to this high point, 2.5 days, we had a bounce back. Great. Is this bounce back big enough, strong enough to call a short-term trend reversal? At this point, will you say that the short-term trend is up? Sadly, no. It's too early. After that bounce back, and this was your US election results, Mr. Trump comes, and after that, the immediate next 2 days, the index decides to again retrace, which looks much more cleaner on the 125-minute time frame. We just discussed this bounce back, and the last 2 days, this retracement. Two things. One, the market is trying to reverse the short-term trend. The selling has slowed down, but it's not complete yet. Number two, the retracements on the downside are pretty deep. It's not that it goes up, it comes down a little bit and goes up again. No, it's coming pretty deep. It's more than 50% retracement of the entire rally, which means we probably are headed for a bit of choppy sessions going forward. Momentum positive, trend not so positive, leads to volatile market conditions. If the momentum is successful, then the trend should reverse up. If the trend is stronger and the selling is still there in the system, momentum will not hold and the trend will go further down. So we are at the crossroads. If we are at the crossroads, we should be open to both long and short trades if I am into derivatives. Let's talk about some levels on the Nifty. The basic levels, the way I look at the Nifty, the basic levels for upsides would be very simple. Point number one, please go above your previous day's high and please post a close above that. That's it. This will be my very first sign that yes, this market can scale back to 24,700 or might take me back to 25,500. For this to happen, the first sign, signal, confirmation, please go above yesterday's, whichever was your previous day, please go above that day's high and post a close. This is number one. As long as that doesn't happen, I don't think this market is ready to be bought into aggressively. On the other hand, the last 2 days the market has kind of slipped a little bit and can continue to slip, can come very close to the previous lows, or just like these, double bottom kind of formations, aise hi bante. This is how the double bottom formations gets created on the charts. So there's a possibility that the index can come close to the previous low, tease the previous lows, maybe wipe off some weak hands, maybe breach and then create a trap or reverse, or maybe we have further selling towards Seedha. Don't know. So from the bearish point of view, yes, any kind of short trade if you take, be careful, it's going to be a volatile ride. And for any kind of long trades, please wait for the market to scale above previous day's high and close above that. So bottom line, we are headed for some choppiness. It probably will be a selective market, selective stocks kind of a day or a week. Earnings are slowly getting behind us. So yeah, I think the market just needs to settle. As long as 24K holds, there is hope. Let's go to the sectoral indices list. And let's start with the Bank Nifty. Now the Bank Nifty on the weekly time frame, you can see, is in a very critical juncture, to be honest. The Bank Nifty in this recent 2.5 day bounce back that I just mentioned for the Nifty, the Bank Nifty played a beautiful role. The most important role was played by the Bank Nifty because that's the sector which moved really sharp. I'll come back to the daily chart, but the first thing from the weekly time frame, what can I see? What can I observe? My momentum indicators are down. My trend indicators are not supportive. Yes, the large picture is structurally bullish. That's all right. But if I do a micro analysis for the last 3 to 4 weeks, it's been volatile and choppy. This is the zone that it had created. It has been volatile and it has been choppy. So it's not been easy. We had gap ups and gap downs. We have support from iBank, a positive move from Axis Bank, which is difficult to hold. HDFC Bank rallied and SBI rallied pretty good. But then you have the IndusInd banks and the Kotak banks which struggled. So I can use the word make or break for the index going forward. It has a decent bit of a support close to this zone. Multiple times it has bounced from that sub 51K level. But then it needs to give us a breakout. It needs to come beyond this zone. Right? What does it seem like? What's the feeling from the daily chart? Well, the analysis, the takeaways, the inputs from the daily chart is predominantly positive. I see over here the momentum is pretty well established. The trend is just improving a bit. If I zoom in, I can see 3 days back we had a proper good hike in, but again the market slipped, retraced. So same logic for the Bank Nifty. For any kind of upsides, please scale above previous day's high, close it, and hopefully you give us this breakout. And if you think that yes, the Bank Nifty can support the Nifty and we can get a breakout on the Bank Nifty, then definitely sort the banking stocks and try to find out which stock is going to help Bank Nifty do this. You might find HDFC Bank and SBI to be a little tired. If that's the case, then who's the one who's going to lead it? It cannot be IDFC First Bank. It cannot be City Union Bank. It has to be some leader. So if you think that the Bank Nifty will give a breakout, then it's better that you check them one by one. On the downside, as I pointed out, it had in the recent past managed pretty sharp bounce back throughout this throughout this zone. So going forward, yes, if it falls, see, my daily chart is not telling me to short, or my daily chart is not giving me any negative reading. My weekly chart will give me a negative reading below this week's low, which is somewhere here. So in this zone, where am I right now, and all the way down till this zone, I'm sorry, I cannot short even if it falls, because I don't have rational reason to short. That's how technical works. So make or break for the Bank Nifty. Auto. A phenomenal weekly chart finally goes through a much needed correction, and these are classic examples of slant divergences. Those who use the concept of divergence on your chart, it doesn't get any cleaner than this. CNX Auto, slant divergence, breakout failure, and the weekly chart has just started to go through first cut after a very long time. The last time it corrected was within this zone. A shallow couple of small corrections here and there. The last time there was a meaningful correction was down here, which is, I think, 2022. So 1 year, 2 years and 3 years. After 3 years, the index is giving you a meaningful correction. That has been the strength of the sector. So weekly charts are not that good, and if you see follow through weakness in the market and CNX Auto breaks the low, it can retrace further down. It can. Daily charts, very similar to what we saw in the Nifty. The momentum indicators have improved, the trend indicators have not improved. So if you ask me, positive level is Thursday's high, a move above Thursday's high, last Thursday's high, and on the downside, last week's low. These are the two levels. Again, if you think that I have a fractal low in place, I have one move, this is a retracement, and I feel this move can come, then you should definitely, take a look at Maruti, M&M, Tata Motors, Bajaj Auto, Hero MotoCo. Very important. Yes, you can take a look at Bharat Forge and the other ancillaries also, but these 5 are very important. So keep an eye on them. So Bank Nifty, banking, financials. Okay, what I'll do is, with the Bank Nifty, I generally do that. I, parallelly, side by side, check the finance, which more or less mirrors the behavior of the Bank Nifty. And then I'll take a look at the PSU Bank, which has given a phenomenal bounce back. Now, a lot of credit goes to no other than State Bank of India, right? And with this move, it has moved into an uptrend, given us a sharp little bit of retracement. It's a red HAGB. We love to take these trades based on these bars on the Heiken. Things are improving for the PSU Bank. Which means that if Bank Nifty can give us the breakout, will it come from the PSU Bank? Maybe the private banks will go for a bit of a hibernation. So keep an eye on the PSU banks as well, especially the ones which carry a little bit of weight. And then the Nifty Private Bank, struggling. Yes, it is back to levels from where it has multiple times found support. So very clearly, when you take a look at charts like this, clearly you can envisage, if the Bank Nifty gives me a breakout in the next week or two, then will the private sector banks which were down give me a reversal, which mean a contrarian kind of a trades, maybe something like a Kotak Bank bouncing back or an Axis Bank showing strength? Or will it be the PSU banks, the SBI, BOBs, the PNBs, which have moved into an uptrend and after coming down will go further up? So, if you track the entire pack, you'll get a sense which stock is going to lead that move. So yeah, that's the banks and financials, make or break. And we'll keep an eye whether the PSU bank extends or the private sector banks bottoms. Auto, we said that Thursday is high and Friday is low for weakness and strength. And then we come down to energy. Energy also very similar to auto, and energy had also gone through a phenomenal multi-month slant divergence. After that, it has given us a breakdown. Weekly charts are not that great. Weekly charts do not give us any signs of bottoming out. Daily charts, though the momentum has improved, no sign of that from the trend. No sign whatsoever. So unless Thursday's high is taken out, unless it creates a range like this, goes up and bottoms out and gives us a proper bottom that we can call, it's not ideal to try and bottom fish this kind of chart unless you're a contrarian trader. So CNX energy, not bullish, bearish predominantly. Because the momentum has improved, it doesn't make sense to sell because it's going to go choppy. Because it's going to stay choppy, any kind of short will not give you returns immediately. So it's better to stay away from shorts. Not enough to go longs. So auto, energy in the same pack, watch list, wait and observe. FMCG, now this pack cracked big time, right? And it's back to its fractal highs, which I sense should ideally, these kind of very good looking multiple times tested fractal highs in the past should behave a bit of polarity should come in. By polarity I mean, I'm sure you know that previous highs should reverse their role and can give us some support. The lows can give us some support. Highs becoming lows. Okay, so if the highs becomes lows, we should get a bounce back. From the weekly chart, do we have any such signs that it is going to bounce back? No. Come down to the daily chart. Come down to the daily chart, and the chart is starting to look nice from a contrarian point of view. There's nothing nice about the trend. It's down. Improved momentum. Now, when you see the trend and the underlying momentum of the chart opposite, it means that the way it was selling in the past, the rate of the selling must be slowing down. This is what it means. If the rate of selling is slowing down, it can be a sign, a precursor of selling exhaustion. Then it can bounce back. Okay? So it happens in a stage by stage manner. So long story short, do I have anything on the daily chart of the CNX FMCG which tells me, oh, it's going to go up? No, sadly no. The concepts that we follow, sadly no. If I come down to another, time frame smaller, 125-minute charts are also not there. So the groundwork is there. The groundwork from the weekly charts, from the daily momentum trend, all those things are there. It's just that we need confirmation from the price. It's just the price needs to sprout out. Okay? So don't go short here. Wait for the price to improve. Again, ITC, Hindustan Unilever plays an extremely important role. IT, the second most important sector after the banks. This is going to be tricky for us. This is going to be tricky for us because when you see a sector breaking down a strong support zone like this, kind of breaks down, throws back, and a follow through sharp rally, generally, again, most of the time based on my experience, they are gone for pretty decent fall. They rarely bounce back like this, which means that we are headed for some choppy, volatile behavior from the IT pack. So we have to be, kind of ready for both kind of trades. What's the sectoral chart telling us? The CNX IT sectoral chart telling us? Structurally positive weekly chart. Weekly chart is slowing down, which you can see from the price, you can see from the indicator. Average range of the weeks have spiked up, so a lot of things are happening on both the direction. Very easy to get chopped out, to get whipsawed if you pick the stock and the price wrong. Daily is little crazy in the sense of this recent sell-off and the bounce back. Trend is, I would say, trendless. I won't talk about trend right now because of such a sharp move, it's better not to. Daily structure is negative. This is 21 period linear regression channel. Structurally, it is negative. So if you ask me, means if I have to look for a trade on the CNX IT, my first inclination will be on the short side. And the major reason for this is a structural negative behavior on the daily and short-term overbought. This is the main two reason. Reason. Then I will look for stocks which looks weaker than the CNX IT. Is it Infosys? Is it TCS? Is it someone else? TCS move was the main reason why we have a move like this on CNBC. So I'll walk this sector. I'll trade this sector very, very carefully next week, if at all, if I have to. Couple of sectors left. Metal. Do we have a double topish behavior on the weekly chart or not? Looks good. Weekly chart structurally very positive, but has started to consolidate in a very wide range. As you can see, it made an all-time high towards the earnings, the elections at our end, Indian elections. And from the month of June we're heading towards December. For 6 months, it has essentially created a range-bound price behavior. So it's like more of a trading sector than an investment. Weekly charts momentum is clearly down. EMAs, the ones we use for the direction, has just started to angle on the downside. Now we have a setup. As you know, we consider Heiken-Ashis as an important input. So if you take a look at the last 3 weeks back and 2 weeks back, essentially negative Heikens. And then last week is a green HAGV. So now you get the picture. By any chance, by any case, if you get a breakdown below last week's low, then metals is negative. Metals you should be looking to short. Daily chart structure is negative. It's given you a very sharp bounce back, which has taken the short-term momentum indicators above, not momentum indicator, RSI above the bought zone. So this is actually, the daily chart can also slowly start to turn on the negative side. So one needs to be careful. Tata Steel, Hindalco, Nalco is holding very well. So you can keep an eye on these stocks. But metals, I will say, more on the negative side. IT, very cheeky, gutsy, maybe on the negative side, but very short-term trades. Bank Nifty, make or break. And auto, energy, FMCG, wait for signs of a bounce back. Pharma and realty are the ones which are remaining. In fact, I'll quickly talk about consumer durables. Generally, I talk about consumer durables and FMCG together, club it together. This is the consumer durables. One of the finest charts is going through a weekly correction. And to be honest, the consumer durables, now I can tell you there are some signs, rational evidences. Yes, this can give you a breakout. This can give us a breakout. I'm not too sure. Pattern traders might find a left shadow ahead and a right shadow, left shoulder, right shoulder. Can be a head and shoulder. I'm not an expert in this one in terms of patterns, but sign of slow selling exhaustion was there. Mild signs of trend improvement has happened last week, and a bit of a consolidation to finish the week with. Those who like to take a little bit of an extra risk and chance can look for a move above last week's high. Consumer durables can give you that bounce back. Remember, you're not in a bull market and buying a breakout. You're essentially in a downtrend buying a bounce back. So keep your hopes limited. If it goes up, a really good move, good for you. But don't expect a big move. If it comes, it's good for you. Yeah, going back to the pharma and realty to finish the sectoral discussion. Just slowing down weekly chart. And I've got a combination of the last 2 weeks which tells me if last week's low is breached, this will crack. This will fall. Very clearly it shows in the daily chart. It has created a range bound volatile zone, structurally negative. So pharma and metals, last week's low, you can put an alert. Below that, both the sectors are likely to fall. If the Nifty fails to hold, if the bank Nifty fails to give that breakout, then I think these two sectors can come off on the downside. And then finally, realty. Realty has already moved into a downtrend, downward momentum for quite some time, and you've got a green HAGB. Now this calls for the same thing. You can add realty, pharma, metal, sub last week's low from a negative point of view. Bank Nifty needs to break out, especially it will be interesting to see whether the PSU banks continues or not. The ones we are keeping on the sidelines are the auto, energy, FMCG, consumer durables. The consumer durables is the most positive looking chart when it comes to bounce back. Not positive as in uptrend and positive momentum. Positive in terms of the possibility of a bounce back. In terms of that, consumer durable gives us the maximum evidence, but right behind it is FMCG, and auto and energy can take some more time. Okay? So I hope this will help you to do the next level of analysis, research, homework that you should do. That, okay, if metal breaks, which stock looks the weakest? Okay, if consumer durables bounces back for the next 1 week, which stock will give me that move? That's the work next that one should do. Okay, fine. So this is where our Nifty, Bank Nifty and Sectoral indices analysis comes to an end. And like every week, we'll move ahead, take your doubts, questions, and find some opportunities for the next week.